Welcome to the ultimate guide on the best exchange for futures trading in cryptocurrency. If you're looking to maximize your profits, manage risk, and trade like a pro, stay tuned because we're breaking it all down today. Whether you're a beginner or an experienced trader, by the end of this video, you'll know exactly which platform suits your needs. Before we get into the best exchanges, let's quickly go over what crypto futures are and why they're so powerful. What are crypto futures? Explanation with animations, long short positions, leverage, liquidation, etc. Now let's look at the top exchanges for crypto futures trading and compare them on key factors. 1. Binance Futures. Pros: high liquidity, deep order books, multiple contracts. Cons: KYC requirements, regulatory concerns in some regions, trading fees and leverage options. Bybit. Pros: no KYC in most cases, user-friendly interface, good customer support. Cons: not available in certain regions, trading fees and leverage options. TOOM. OKX. Pros: low fees, strong security, innovative products. Cons: can be complex for beginners, trading fees and leverage options. KuCoin Futures. Pros: wide range of altcoin futures, decent leverage. Cons: customer support issues, trading fees and leverage options. Why trade futures instead of spot? Binance Futures Demo. Open a long position, adjust leverage, set stop loss. Bybit Demo. Execute a short trade, explain funding fees, monitor liquidation prices. OKX Demo. Use advanced features like grid trading and perpetual swaps. KuCoin Demo. Show cross-margin versus isolated margin trading. Remember, always use risk management strategies like stop losses and portfolio diversification. Each trader has different needs. Here's a quick summary to help you choose. Best for beginners: Bybit, easy UI, low fees. Best for high liquidity: Binance Futures. Best for altcoin futures: KuCoin Futures. Best for advanced traders: OKX. Visuals: side-by-side comparison chart. Higher potential profits, hedging strategies, market volatility, risks involved, liquidation risks, funding fees, leverage traps, how to avoid liquidation, importance of risk-reward ratios, setting up trading bots for passive futures trading, understanding market sentiment.